Hey everyone, welcome back to Corporate Decoder. Today we are diving into AgriForce Growing Systems' latest filing. And let me tell you, this one is a roller coaster. We're going to see votes, reverse stock splits, and maybe even some financial magic. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. So what's the big picture? AgriForce, a company focused on growing systems, had a special meeting with its stockholders where some pretty important decisions were made. Think debt, shares, and the possibility of fewer shares being worth more. Let's get into the details. First off, the company asked its stockholders to approve a debt financing plan from January. This means AgriForce took on some debt and issued shares related to it. The vote was 484,474, 106,414 against, and 16,309 abstained. There were also 650,581 brokered, but it also means they now have to pay that money back plus interest. It's like taking out a loan to grow your business, which can be a good thing if you use the money wisely, but it can also be It's why 10 broker non-votes, which means brokers holding shares for clients didn't vote on this issue. So it looks like the majority of the votes cast approved the debt financing. This is important because it gives AgriForce more money to work with, but it also means they now have to pay that money back plus interest. It's like taking out a loan to grow your business, which can be a good thing if you use the money wisely, but it can also be risky if you don't. Next up, a reverse stock split. This is where a company reduces the total number of its outstanding shares. In this case, AgriForce wanted the option to do a reverse stock split in the range of 40-15 to 100-100. This means that for every 15 to 100, this means that for every 15 to 100-100. This means that for every 15 to 100-100 against and 770 definite weight of 4 attractive to investors. The vote was 120,034, 2070. 2074, 2074, 2074, 2074, 2070, 258 against, and 778 against, and 1774, 258 against, and 758 against, and 7774, 2074, 2074 sizes, you still have the same amount of pizza. But it can be a sign that the company is struggling and is trying to artificially inflate the stock price. A lot of companies do this when they... Finally, AgriForce asked stockholders to approve an increase in the number of shares available under their 2024 equity incentive plan up to 3 million. This plan is used to give stock options or shares to employees, directors, and consultants as a way to motivate them. The vote here was 475-47 absent, with 581 broker non-votes. So this proposal also passed. Increasing the number of shares available under this plan means the company can give out more stock, which can attract and retain talent, but it also dilutes the value of existing shares, meaning each share represents a smaller piece of the company. Now, let's move to the forward-looking statements. 547 against and 1781 broker non-votes. So this proposal also passed. Increasing the number of shares available under this plan means the company can give out more stock, which can attract and retain talent, but it also dilutes the value of existing shares, meaning each share represents a smaller piece of the company. Votes moved. The company included what they call forward-looking statements. This is basically AgriForce saying, hey, we're making predictions about the future, but things might not go exactly as we expect. They use words like anticipate, believe, estimate, and expect. This is a standard legal disclaimer, but it's a good reminder that anything can happen in the business world. It's like when a sports team says, we're going to win the championship, but then may lose in the first round of the playoffs. Finally, let's quickly glance at the securities registered. The company has common shares listed on the Nasdaq Capital Market under the ticker symbol AGRI. This just means that you can buy and sell shares of AgriForce on the stock market. And now for my take on all of this. AgriForce is at a crucial point. The approval of the debt financing gives them more financial flexibility, but it also adds pressure to perform. The reverse stock split is a bit of a red flag, suggesting they need to boost their stock price. The increased shares for the equity incentive plan could help attract talent, but it's important they manage this carefully to avoid hurting existing shareholders. A notable risk is whether AgriForce can effectively use the debt financing to grow the business and generate profits. If they don't, they could struggle to repay the debt. On the opportunity side, if they can successfully execute their growth strategy, the reverse stock split could make them more attractive to investors and lead to a higher stock price. In conclusion, AgriForce has some work to do. They need to show that they can generate revenue and profits and that they can manage their debt effectively. It's a mixed bag of potential and risk. Alright, that's our breakdown of AgriForce's latest filing. What's your take on these decisions and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.